right? I thought the Maynard comments were especially interesting because he still thinks we're going to have a recession. But he thinks it's going to be a couple years away. And there's a long enough runway before we even have to start thinking about it because the economy is so strong now that it's bullish for stocks. And not only does he think it's bullish for stocks, he's actually buying in his personal portfolio, he said, which I thought was the most telling thing that he said. He's putting his money where his mouth is in his own personal portfolio, and he's buying growth. He's buying cyclical stocks. I think he's been listening to you.
Well, look, I'm not going to lie to you, Scott. I took a great deal of comfort from hearing what Mr. Maynard had to say because I have been feeling a little bit on an island here. But when you're on an island, that gives you a chance to be introspective and say, hey, am I getting it wrong? Now, I certainly see the Fed's change of stance. But what I also see, and I think what Mr. Maynard is seeing in the stocks the type of stocks that you mentioned he's buying, is that economic growth right now is pretty strong. And we'll get into some earnings reports later. I don't want to telegraph that now. But when you think about consumer balance sheets and corporate balance sheets, they're pretty strong, and they're indicating that consumers and corporations are spending. So, yeah, look, at some point we're going to get a recession. But, boy, I just don't see it on the horizon, not with the economic statistics that I'm seeing. Think about last week's jobless claims, nor with, earnings that are just starting to come in. This is day one, so I don't want to get too giddy about it. But I just see more positive signs than negatives. And that's simply it. I see more positive signs than negatives. I see the negatives. I see more positives.
I hear you. And this is a today versus tomorrow call. There's reason to be positive today. There's reason why you see so many more positives than negatives today. His point is that eventually the Fed is going to have to do what it's going to do. It's going to put us into a recession. But right now it doesn't really matter because you can have rates moving higher. You can have the Fed being aggressive now, and stocks can still go up. And, oh, by the way, Courtney, he said, again, he reiterated what he said a month ago on CNBC. He likes PayPal. He likes Block, former Square. He owns both of those personally. And, oh, by the way, you're adding to Block as well.
I did. Good afternoon, Scott. So good to see you as always. You know, it's a very interesting time, and I oftentimes agree with my friend over there, Mr. Jimmy, as well as Pete. And candidly, less bad is good, as our friend Tom Lee would love to say. Right now, we are in a very interesting time where we're seeing consumer balance sheets extremely strong, which obviously is 2/3 of GDP. We're seeing, though, simultaneously a slowing in that real-time live data around electronics and other large purchases like cars, right? So it's kind of like, what do you do here? I personally am adding to positions I've been strong in and been a holder of for a while. I did add to Block. I do think it's undervalued, both from a fundamental perspective as well as a sentiment perspective, and we have to think about how that's occurring. Same thing with Pete. I own Goldman Sachs, which I'm sure we're going to talk about financials as we kick off this earnings season, but I am adding to quality names that will weather this storm over the long term, because the uncertainty in the short term is just something that I don't have a crystal ball to predict.
You know, I find that you guys are making a lot of moves all of a sudden. You know, Joe, for example, you bought Chipotle back, right? You used to own it. You bought it back. Now, you trimmed AbbVie to make that purchase. But talk me through the reasoning of why Chipotle stood out to you right now that you need to buy it. And then we're going to talk about another one, too. But give me that one first.
Well, first of all, I agree with Scott's comments. I don't think we are in the initial stages of a bear market. So I'm looking for opportunities. I agree with what Courtney's saying, opportunities where you could find quality. And I also agree with the near term is still very clouded. We had that break below the 50-day moving average yesterday, and you had a technical sell-off. So in the near term, I don't know the market direction. What happened this morning is AbbVie is a stock that I have owned since November of last year. I purchased it at 115. You know that I study momentum. You had 3 consecutive days where AbbVie experienced what we call range expansion. That means, Scott, on a daily basis, the range is much larger than what you've witnessed over the last 2 years. And the stock went up 8% during that period. Well, that was quickly negated. It was completely eliminated by 3 negative range expansion days. So I had to take half that position off. I had funds. I studied my portfolio. I said, where am I from a strategic perspective missing something? And it's towards growth. And I wanted growth at a reasonable value. I looked at consumer discretionary. I've listened a lot to Brian Nichols' comments over the last several months. And I think Chipotle, again, citing what Courtney said, really less bad is good. Chipotle is actually able to endure this inflationary environment. Fast casual seems to have some resiliency. There's some brand recognition, and there's the efficiency of the way management is navigating this inflationary process. So I took the funds from AbbVie, very happily put them into Chipotle, and it elevates my exposure to growth, which is something I was looking to do.
You also bought Palo Alto, which, by the way, I mean, Dan Ives is probably jumping up and down cheering at this because he's called this a table pounder. I've had him on Overtime where he has talked about that. Why Palo Alto right now?
First of all, I own Fortinet in Joe T. So I do have limited exposure to the theme of cybersecurity. But Dan Ives, Josh Brown, Jim Cramer, they have all been talking about it. And if I forgot anyone, I apologize. But cybersecurity is such a dominant theme in 2022. Palo Alto is a way to add to that cybersecurity exposure. Listen, if you want faster revenue growth and higher beta exposure, and if the market from here is going to appreciate significantly, CrowdStrike is the better trade. But I kind of wanted to trade down a little in the beta exposure. I wanted to get growth at more of a reasonable price. That's what Palo Alto will deliver for you. It's got to focus on the firewall. I'm very happy to own it here. I think it breaks out significantly beyond $700.
Okay. Rob Sechin is making some moves as well. You bought Blackstone, so you got a little private equity action going on there, and you bought more United Health. So again, it's got like Meinert's talking about you can buy stocks here, that you have runway to do so, and I feel like you guys are doing that, including Seach. Why these?
Yes, I just want to comment on the environment too first, Scott, because it'll lead to what we're doing. The positives are known and need to stay strong, and the negatives are known and need not to get worse. And I think there's a greater risk that the negatives get worse than the positives stay strong, but it's clear that the market's trying to make a bottom right now. We've rallied them the last few days and gave it up. We'll see what happens today. But this is a trader's market, and we're trying to take advantage of the volatility. So with Blackstone, here's a stock that share price is down 25% from last year's highs. It's been caught in the recent market turbulence. It's the largest retail beneficiary from the uptake in their exposure to liquid private markets. They've created a lot of perpetual vehicles. And while it trades at a slight premium to the group, it's still a very strong blue chip company to add to initiate a new position in. United Healthcare, a little different. We own it. We like healthcare. Healthcare has historically been one of the top performing sectors following a yield curve inversion. I think people get a little defensive. In this case, it's nice because healthcare is able to protect some of the margin that we always talked about. And as we increase the quality in our portfolios and get a little defensive, UNH is a great way to do that. It's dominant in the top three end markets in this country: commercial, and Medicare and Medicaid. Right. So, it doesn't mean you sit on your hands when things are tough.
Yeah. So, Pete, it's not like, you guys are all making moves and you don't expect, this volatility or turbulence to continue. Like Jamie Dimon was saying today on the JP Morgan call, quote, no chance you won't have volatile markets, right? I mean, we're not suggesting, nor is Scott Minerd, that the market's just all of a sudden going to go straight up because we finally can come to grips with the fact that the Fed is raising rates in a very strong economy. And you may, in fact, have that kind of runway that he's been talking about. I want you to listen, by the way, because Bullard today was out to the FT saying it's fantasy to think that modest rate rises will tame inflation. And look, he's been probably as hawkish as anybody. And he's, whether he represents a broad view of the Fed, who knows? And we're going to find out in May what the Fed does. But I thought what else Minard had to tell me yesterday. I want you to listen to this too, Pete. I want you to react to it again about sort of this counter move to what most people are thinking. Let's listen.